Good evening, everyone. Happy St. Patrick's Day. Welcome to the Lock in Your Success Trade and Market Update for March 17th, 2013. Before we get going, please be aware that this presentation is for educational purposes only, and we are not financial advisors, nor are we broker-dealers, and we do not make specific trade recommendations. Any trades and or results covered in this presentation may or may not be live. Any hypothetical computer simulated performance results are believed to be as accurately presented as possible. However, since the trades have not been actually executed, if they were in fact hypothetical, then the results may vary due to unknown impacts of commissions and slippage and so forth. Also, the risk in trading securities, options, futures, and forex can be substantial. Therefore, make sure you're aware of all those risks prior to placing any trades. And remember to visit our trading blog if you happen to be looking at us on YouTube, www.lockinyoursuccess.com, and come on and join our mailing list. I'm doing a presentation Tuesday night on the ROCK trade, on the options tribe, so make sure you come on and join us for that. That should be very interesting. And also, while you're there, check out the other great programs that we have to offer. You can see those at bearishbutterfly.com, m3options.com, and of course on my website at lockinyoursuccess.com. Let's take a look at our charts. If you were tuned in, if you had tuned in on last week, we set a target short term for the SPX of 1560, and we happened to slightly exceed that number, and we're sitting right up here at 1560 for the week, so had a good call on that one. As far as the Dow goes, we had a call of 14.5, and we're sitting here at 14.514, so another nice call on that one. We had an NDX target of 2830, and the NDX has been lagging. It's been lagging this whole rally. It's been very lackluster, very sideways. Very good for our option neutrals traders who've been, or market neutral traders who've been trading it. So the index has been very, very friendly for us. Nice sideways movement, and like I said, it has been lagging quite a bit. The Russell has been exactly the opposite. It has been flying. We had a number on this of 945, and we came right up to it, kind of sat there for a while, and the news on Thursday kind of punched us through. So this year, it continues to outperform everything and surprise me with targets and so forth. It just keeps blowing through resistance levels. It's been on quite a run here. All right, so that said, one of the things I was looking at was for the SPX possibly to eventually come up into its previous highs. It would be very unlikely in general for the market to push it this high and not touch this level. That is, of course, unless we get bad news. Because as we know, all irrational rallies, which I consider this completely irrational, and people are just kind of throwing money at the market, all these irrational type of rallies end with some sort of bad news. And we got some bad news earlier today with the crisis going on over the banking crisis there in Europe. As we can see, the futures are down 13 or 1.3%. Our Asian markets fell almost 2%. On the news, so I wouldn't be surprised if we fall 2% on the news. We need to wait and see what happens. You know, is the market up to all-time highs and just kind of shrug it off, or is it going to take it seriously and have some sort of at least a very minor pullback to a still very strong uptrending 20-day moving average? We shall wait and see. With a strength in the market, I would think that we'd be limited to how far this pulls back, if it does pull back. If we have a move similar to the Asian move, then we're looking at a drop of almost 20 points in the Russell. We'll see if that happens. So that's it. We're kind of news driven. We're overextended still. Retracement levels here on the SPX should be somewhere around the 1530 level. So that's a pretty good 30-point drop. Retracement on the Dow. This thing has just been in outer space here. It's you think the Russell's been strong. I mean, we had this nice sideways consolidation, but since that breakout, it has just been really, really strong. And retracement here would probably bring us like a 3+ 100-point move down. Futures are down 139 already, so we could take back a lot of these gains relatively quickly if we do take this news seriously. The NDX, what can I say? The thing's been sagging, and we got a support level. Well, we got some support down here. If we break gap down around like about 2760 or so. So you would expect at least a 50-day moving average touch here. I wouldn't be surprised to pull down to this low of 2700. Usually the lagging indices will tend to fall a little faster. So if I'm going to set a downside target for this, it'd be 2700. If we set any more upside targets, I still think we're at 2830 here. Not a very big move to the upside in the NDX that I see. And like I said, upside for the Dow, it's just plain overbought, and any move up from here to me is irrational, so I could turn it any time. SPX, like I said, I think it's going to fish for the highs. And downside for the Russell, 20-day moving average, which is 925, maybe slightly lower. At least this, we come into this trend line, so depending on if that happens tomorrow, that would be a really big move. That'd be a 30-pointer. We haven't seen one of those in a long, long time. That'd be surprising. A 20-point move wouldn't be surprising, though. That would put us right down to these previous highs right here at about 923. That would be more of a realistic move here. Take back last week's gains if it comes down. And to the upside, I don't think this thing really has any more. It may continue to grind, but I just don't see it. Not until we get some sort of retracement. I mean, once we've come back and reset, that's a different story, and we're going up again. But for now, that's what I'm thinking here. Let's take a look at our positions. And the first thing we can do is kind of go over last month's stuff, because everything was closed out, whether we wanted to or not, because options expired. And I'd like to start taking a look here at the V Condor. And I'm going to look at the March and May V Condor at the same time, because they're in the same list here. So, well, actually, let's look at the May V Condor first. I entered the May V Condor the day I exited the March V Condor, which was Wednesday. I came in here, and at the time, let's just go into BackTrader. So by end of day Wednesday, I had put this on. I sold my 10 delta calls. I sold my 10 delta puts at the time, and I bought my straddle here at 930. And the position looks like this. The continued move up during the week. This likes an up grinding move. That's what we've had. So it was a good move. It does not like a hard down move. You'll see a volatility take a hit on this. So if we get a shot down to 920 or so, then you'll see a depression in the T+0 line, which is completely normal. But for now, that was our entry. There have been no adjustments at all, and we'll just go to the end of the day on Friday. About $400. Looks like this as of market close. Okay, so that's the quick and dirty May V Condor. As far as the March, at the beginning of the week, we kind of looked like this. I was just kind of waiting for the theta decay to completely come out of this. Maybe the market would sit or just slightly back off during the week. That didn't happen. It continued to rise. Really not much of a problem for us, though. We ended up taking this off on Wednesday, right towards the end of the day, where we were up about $3,900. And this is what we looked like previous to taking it off. Normally I would let this expire, but the market had just been pushing up, and who knows how far it was going to go. And for the money left in this thing, there's no point in holding on if the market's just going to be that bullish. So I went ahead and just shut this thing down, bought back these shorts for a very small amount of money, and went ahead and closed it. It wasn't worth it anymore. So that was basically that trade. It came out at a pretty much just under $4,000 profit, and that's like a 7.9% return on planned capital. So that was a good trade on the March Bearish Butterfly. If we scoot back to Monday, this looked really good here. Things were kind of right in the center of our graph. Of course, and we were right in the center of our graph. We looked just like this, so everything was going fine. As time went by and we get towards the end of the day, because we're in expiration, we're getting a lot of theta decay. We didn't get a lot of price movement, so money starts coming back into this. You get here into Tuesday, the market continued to sit. If we take a look at our analyzed graph, update is really working for us here. You can see we're up at like 2,000, theoretically taking in $2,000 a day. I got this up to the point where I was fairly happy with the profit level in it. So when we come up to, let's see, on the 12th, what time was that? Okay, so about, let's go to 10:30, and then we'll just go to 11. If we go to 10:30, you can see I'm up near my low profit target, and I just didn't want the price movement risk anymore, back and forth price movement risk. Had I held on to it, I would have made out a little bit better here, but I'm perfectly happy with taking the 5,000-ish dollars and moving on. So instead of completely exiting the trade, I just got out of our middle butterfly. I sold my highest price butterfly, took some capital out of the trade, widened the trade out, and this is what we look like at 11 o'clock, up 5,500. And then at around 12, or a little between 11 and 12, we pulled out that center butterfly, and the profit, it was right about $5,035, and we're kind of sitting here. So now all I need is a little bit of theta decay. These guys are going to decay fairly fast if the market doesn't move. I'll get close to, I figured I'd be closing out at close to $6,500 and be able to expire this month fairly safely. However, as you know, the market decided it wanted to creep up, as it has been for months now. And let's see, the following day we're at 58. Everything looks really nice here. As we continue through Wednesday, I was getting really close to my maximum profit on this, up 6,100. I only got a couple $100 left. It looked like the market may actually take off on us, so I decided to just come in and just shut this thing down, take my money and go home. So here we are, sitting at 12 o'clock on Wednesday, and before 12:30 it was shut down. And when you close this and take a look at our reports, we came in at a gain of almost $6,000 by the time I got it closed out. So very happy with that. Better than a low profit target. Kind of a tough month, especially for a bearish position. Right? The market's just been kind of grinding up. So very happy with the way that came out. And let's see what else we got going on here. We had the M3. This, once again, the M3 was a very challenging month for the straight M3 trade. As I've said in the past, this trade is designed to break even if the market continues to go up and doesn't pull back. That's what it's designed to do. Usually if it gets up money before it takes off, you'll usually get out with a small gain. If you're down money, you'll probably get out with a small loss. I ended up coming out with a very small loss with the March M3 trade. If we look at this on Wednesday morning, this is what the trade looked like. It's down, a little over $100, and delta's a little high here. If you remember right, we rolled up on top of the market and made this type of a position out of it. When I was closing things out on Wednesday, I decided to just go ahead and close this. I was fairly confident if I hung with it, I may be able to pull it at a small profit, but I'm not going to risk it. I mean, the market's just been a pain in the neck, and we're concerned about the gap down more than even a creep up at this point. So we're getting close to expiration. I decided to just close the thing down at a very small loss. So we just came in here, and like I said, I didn't make any adjustments to this trade, I don't think, this week. For the most part, we just kind of sat here and we closed this out pretty much the same time frame we closed the Bearish Butterfly out. I shut it down and ended up with a very small loss of $298 by the time we got out on a $50,000 trade, which is 0.6% down. Very happy with that, and considering the market. So we move on to next month. I went ahead after we shut this down and opened our April M3 trade, which I'll quickly go over how I opened that. I'm sorry, I didn't do it this day. I did it on Thursday, towards the end of the day. I'm losing track of my days here. That's what happens sometimes. So if we come in at 1400, which is 2 o'clock, apparently I did it about 1:30. I came in here and I entered the M3 trade for April. One of the things I want to talk about is Thinkorswim has corrected their margining, and I can now do uneven winged vertical spreads and not get double charged for it. So that being the case, and this is what I do with some of the larger accounts, is I'm going to come in here and instead of buying 10 920 butterflies and then coming in and buying 10 920 940 vertical spreads, for example, I'm just going to come in and buy this or as a broken wing condor. and I come in here and I bought a 870, short the 920s, short the 940s, and short the 970s. Synthetically the same as a 920 with 10 vertical spreads, 20 points wide, and I added two 79 delta calls to give me a very flat delta. Because the market's been so bullish, I'm just hedging heavily to the upside. So here is what that entry looks like. And towards the end of the day, it's pretty much, or towards the end of the day on Friday, not a lot had happened, and we're just sitting here, slightly negative delta, showing us down a little bit of money because of options pricing. And this is what the position looks like now. Now, we are, like I said, experiencing the futures being down quite a bit tonight. If that continues into tomorrow, I may end up needing to do something with this tomorrow. Because I'm overhedged, if it gets too nasty, I don't really want to roll this back until we get to 925 maybe, or at least 930. So I will probably back out of some of the hedging. Again, I don't usually like to do that. However, with this really low volatility, sometimes you have to, because you don't really want to be rolling back at 920 butterfly when the market's at 940 or something. So I'd really like to get, definitely under 930, preferably under 925 before I actually pull this back. And if that's the case, I may just back out of these a little bit, just kind of pull something like this if I start turning into a minor delta problem to the downside, and pick this up. If we get a major pull down to 920, this will be rolled back. We'll roll it back. We'll cut the hedging back, and it'll look pretty nice. Volatility is going to take a hit on our profit and loss. That's only to be expected with a volatility this low. If you get some sort of a volatility, a scare in the market, that might happen. But then again, the futures may be flat tomorrow, and who knows, we could have an up day, because the market's weird that way. We never know what it's going to do for the futures. So that is the March and April M3. It was basically another flat month for us here with this trade, and hopefully the market runs sideways a bit, and we can actually we can do something and get this going. All right, so let's take a look at our ROCK trade for March, and we'll look at it on Monday morning. This is what the position looked like. It was up about $1,000. Take a look at our analyzed graph. Really healthy looking, actually, coming into expiration. We still got a lot of profit left. We have butterflies here at 930. We have them up at 950, and we have some vertical spreads here at 920, 950. And this is what the graph looks like. Our delta is nice and balanced of a positive 105. And as the day progresses, we really kind of do nothing here because the market really didn't do anything. And I don't believe we did anything until Wednesday after, I think it was after 1 o'clock. So let's just kind of go to noontime or 12:30. Let's go to 12. And the market's starting to, it really hasn't done anything yet. And 12:30. I think so. The market's so the market's starting to creep to the upside here. I'm starting to take on some negative delta. So the market was here, and it was continuing to climb between 12:30 and 1. So by the time 1 o'clock came, it was more than minus 225 delta. I came in here and added two more 920, 940 vertical spreads. Now normally, if you look at the regular guidelines, what this tells you to do is to add butterflies at 970. However, one thing you'll notice is we have no time premium at 970. So rather than adding the butterflies at 970, what I'm going to do is I'm going to buy the call where I would have bought the call. I'm going to sell the maximum time premium I can to bring money into the trade. And as this market goes up, I will eventually continue to sell time premium more or less at the money until the point where I'm up to the 970s. And that way I'm getting my maximum bang for my buck here. So anyway, here's what we look like as of 1 o'clock on Wednesday. We did close the market that day and this way, and went into Thursday morning. And Thursday being the day of expiration, we don't want to let this get away from us. In the morning here was up a nice $7,600. If I thought I could have got out of it for then, if I knew it was going to happen this day, I was kind of expecting another flat day. Like I said, I thought the Russ was going to actually top out at about 945, so I figured we were pretty much all set here. Didn't happen. right? The market just decided it wanted to take off. So as the day went on, we started adding into these verticals. So here I had four 920, 940s. I bought some 940, 950 verticals to roll them up to the 950 level where all the time premium was. I also added four more 920, 950 verticals to keep trying to keep our delta down. Right, even here it's really over where I'd like it. This is taking a toll on our profit and loss because this is a decent sized move here. By 10 o'clock in the morning, we're at $4. As the day goes on, I'm just continuing to do this. See, now I have 10 spreads, 920, 950. Again, trying to control my delta. It's cut back down to 147. If I look at my T-log, what times did we do something? We did something again at 10:52. As the market continued its bullishness, we came in here and I actually started to pull off these 930 butterflies because I wasn't getting any more time premium kick, but I was continuing to have delta problems because the market maker started really skewing stuff to the upside here. If I take a look at our T-log, we did something again right at noontime. Actually, one at 11:52 and then at noontime. So we'll come right up into the noontime adjustments. Again, the market continued to go up. I continued to pull off. I pulled off another one of these lower end butterflies. Here's what our analyzed graph's starting to look like. It's getting really pointy in here. And we go to, let's go to 1 o'clock. And I continue to pull down then our 930 butterflies as the market continues to go up. I'm pushing around $6,000 profit. It would be nice if the market would just sit for a couple hours. You can look at the theta level. It's huge, right? It's $6,000, or it's up to 6,700 theta. So all we really need is for the market makers to decide the market's not moving a whole lot. I can get a good boost in this position and pop out of it. And I'm just kind of waiting for that to happen, That happens for me right around almost 4 o'clock. They finally start pulling the values out, and then I go ahead and get out of the, not 4 o'clock. What time was that? That was 1400. Right before 2 o'clock. So if we look at this at 1:30, right, we're up almost 7,000. By the time we were pushing 2 o'clock, this was pushing like 7,500 or something, I think, and I just went ahead and dropped out of it. So if you by the time we hit 2 o'clock, the position was closed. And if we take a look at our reports here, there's a gain of about $7,500, which makes a 12.5% gain on the rock trade for the month. So that all the March positions, I believe. I showed you the May V Condor. I showed you the April M3. I did not go over the April Bearish Butterfly. And this here is the April Bearish Butterfly as of 2 o'clock on Thursday, March 14th. I was having a delta problem to the upside. So we had 920 and 940 butterflies on. Delta was too high. At the time, the price really wasn't high enough for me to roll to the 960s, so I didn't do it yet. By the time the market closed at the end of the day, it was. And I apparently did it even after 5:30 here. So if we go into the next day, here is what our position looked like. We have the 940s and the 960s, and here's the position here. I do not like this position. I don't like it when the market forces me to do this. However, it's just been a reality of the recent market. So at the end of the day, Friday, this is where we are, and we shall see how it goes. We are down a little bit more than 10% here. So, and I'm in what I think is not the greatest situation. So I'm not liking this trade right now. We shall see how it goes, though. Most of the time, it works out fine. With a gap down this potentially coming tomorrow, it's going to hurt a little bit. So it should be an interesting month. And will it work out? I mean, it should do okay. So that is that. I did not enter the March rock trade as of yet, the April rock trade as of yet, because that's not started till 30 days. So we'll give that a couple of days, which might be nice because the market may decide where it's going by then. And the last but not least would be the April V Condor. We'll just kind of touch base at how that thing's going. This trade is up about $1,300. it's been kind of not the best month so far for this. It's been going okay. Like I said, it's up some money, so it's not a big deal. One of the things I did with this is I've been taking this call and rolling it forward, trying to protect the profits because I just keep thinking the market's topped out and it's going to be coming down. So I had, continually rolled this up. I'm trying to raise my expiration graph up so we can at least make 3 grand on this for the month and call it a day, should the market flatten out. However, the continued up move, which was again a little bit surprising to me, caused our delta to go a little bit too negative. So what I ended up doing is I ended up rolling this on the 14th, which was Thursday, taking the 960 call back to 940. And I just did that to deal with the fact I was getting a little bit too negative delta here. But anyway, this is what the position looks like right now. There is no problem with it whatsoever. If we get a big down move, again, the volatility is going to hurt this a little bit. Not really concerned about it. The market would have to get absolutely decimated for this to have a problem to the downside, and that is not likely to happen. It's more likely than anything else we'll be up in this range, and it'll be a good trade for the month. So this is going well. And so we have not entered our April rock trade yet. Our April M3 is just opened and remains to be seen. Our April V trade's doing well. Our May V trade's doing fine, and our April Bearish Butterfly, not digging it. It's down some money. It's in the middle of the graph, but like I said, there's really not a problem with it. We'll just have to see if we can ride the market out and see how it goes. And one last thing I'd like to do is take just a quick update of the results of how we're doing for the year. This is our profit plan for our trading for this year, for 2013. And thus far, since we've closed out March, for the Bearish Butterfly in January, we had a very small 1% loss. This, again, was a winnable trade that I didn't really want to watch into expiration. So I kind of widened it out a little bit, and I brought it back to a 1% loss. So no big deal there. February was a 12.5% gain in a very tough bullish month. March was a 12% gain in a tough bullish month. So this trade is doing pretty well. It's up 23.5%. If you compare that to last year, the Bearish Butterfly was actually down money this time last year. This was the 2012 numbers. So I'm really liking the results so far for that trade. The M3 trade this year has been relatively flat. We had a small loss, 3.6% in January. We had a very small gain in February and a very small loss in March. So we're relatively flat. We're down 4.1% for the year. Not a big deal at all. Last year this time we were up about 7%. So certainly recoverable. The market's just been a little bit crazy and continues to run up into expiration, which, like I said, the trade's designed to break even under those circumstances. So I'm very happy so far. As far as the rock trade, we did not track that last year, but this year we had a 20% win in January. We had a 12% win in February, and we had a 15.1% win in March. So this trade's been doing very well so far this year. The V trades have also been doing decent. We've had a 2.7% in January, 0.8% in February, and a 7.9% in March. So all is well, all's on track, no disasters here, and we're happy with the results. We just have to get this, as soon as the market flattens out, this M3 trade gets cranking, we'll get that back up there. And that's all I have for tonight. I hope everybody has an awesome week this week, trading and whatever else they're doing. And I will keep you updated with any changes. Thank you and good night.